The real question is, how does the market get from here to here? How does it do that? How do you get this motion in here? I would say that probably 77, maybe 80% of traders would have no real answer for this. They would say something like, well, there are more buyers than sellers. Yeah, but that's, that may be not true. Oh. Okay, so how does the market get from here to here? And more importantly, is there some kind of reason why? Is there a reason why the market does go from here to here? Well, first of all, in liquid markets hate going nowhere. Okay, they just hate going sideways. They hate going sideways. They like action. Okay, the market moves sideways, boom, falls down, goes sideways, boom, goes up. The reason why we focus on the sweet spot hours is because this whole demand supply actually has some teeth to it. It has somebody behind it. Okay, 2 o'clock in the morning Eastern time, the big guns are sleeping, folks. The guys that are trading the money, they're asleep. They're not sitting up on their desk at 2 o'clock in the morning. Now if something happens, the guy on the desk knows, hey, call this guy. He has a direct line. And you know what? That guy probably has some kind of quote screen right next to his bed. Okay? Read the Market Wizards books. Okay, you'll get a really good picture with some of these currency traders and the guys running these big funds, what they do. They're sleeping at 2 o'clock in the morning. Plus, there's just nothing going on. Government announcements aren't coming out. So absent some kind of event, somebody getting shot, a bomb going off, nothing is going on. So what happens? Supply is staying the same, but is there demand? Okay, so if your description of the market is for every buyer there's a seller, that's why the market went up, but there are more buyers than sellers. What you're saying is there was more demand than there was supply. What's driving the demand? That's my question to you. What drives the demand? We just looked at an example of Beanie Babies where there was artificially created demand. Oh, this one's going, there's a limited edition of this. There are only so many being made. We're going to quote unquote retire this Beanie Baby. Okay? What is driving the demand that's going to push this up? Well, let's look at a couple of scenarios. Let's look at one scenario. Because I'll kill two birds with one stone. First of all, the market moves in what I would say a predictable. The market moves in a predictable way. And what do I mean by that? What I mean is the market will move to prior areas of support and resistance, this black area. Now some of you might be saying, well, come on, Mac, look at how big that area is. How can I make any money? That's 380 up to 250. Okay, you've got, 80 pips worth of range in there. How do I decide where the market's going to stop? I want to know exactly where. The engineers cry out, where? Tell me where. What price? I want to know the price to the penny. Well, I'm not going to be able to tell you that, but I can tell you the mechanics behind why the market likes to move back to these areas. Okay? So let me tell you a little story. When gas was at $1.50, actually, you know what? I'll use a real example. This actually happened here in Arizona. For those of you who don't know,